everybody, this is Eric with Low VA Rates, wearing red as always, loud and proud on a Friday afternoon here in beautiful Utah. We wear red because we love our veterans, and red to us stands for remember, everyone deployed. So, we just ordered a whole new batch of these red t-shirts. We call it Red Swag here at Low VA Rates. If you'd like some, all you have to do is go and put hashtag Red Friday, just like this, under a picture of you or loved one wearing red, and then you tag, oops, I just dropped my pen, then you tag Low VA Rates. You put the @ sign, and then you type in Low VA Rates, and we will reach out to you through a direct message or some sort of personal message. We'll send you your own red swag. We have hats, we have t-shirts, we have sweatshirts. Love to help you out. Just spread the word to everybody that Low VA Rates supports our veterans. Let's jump right into this today. And it's been a while since we've had anybody asking questions. Maybe I've been rambling, so I'm going to try to get straight to the point. If you can stick with me for the next 2 to 3 minutes, I'd love to answer any questions you have about closing costs. Now, we have videos out here on YouTube and Facebook about closing costs, but we've had some people commenting that we should go a bit deeper. Okay, so I'm going to do my best to go deeper on closing costs today. It's such a broad topic that I could talk for hours, which I know nobody has time for. So let's talk about the first thing first. A lot of veterans and others out there, because this isn't just for veterans or VA loans, this is a standard question that a lot of people have, is how do you know what closing costs are necessary and which ones aren't? Okay, so I'm going to do my best to get straight to the point there. And I'm going to speak in loans in general, okay? But here's what's going to be necessary almost always. Now you're already saying, wait, you're saying almost, so there's exceptions. Of course there are. Here's the main exception. You can certainly do a loan with zero closing costs. That is possible. That's not false advertising. If you hear a radio ad or you see someone or someone tells you they have a loan with no closing costs, that's possible. But keep in mind, anytime you have a loan with no costs, it means one thing. You're taking a higher rate. No ifs, ands, or buts about it. The higher the rate you get, the less your closing costs should be. So there's one of the first things you probably should learn as far as a deeper dive. But let's talk about what closing costs you have to pay, generally speaking. You're going to have an appraisal fee. That is very standard. Almost always you're going to have that. There are a couple of VA loans that don't require an appraisal, but 9 times out of 10, you're going to have an appraisal. In addition, you're going to have, and we're going to get a little bit more deeper into this in a second, you're going to have an origination fee with most lenders in most cases. Little hint here, at Low VA Rates, we do not charge an origination fee on our purchase loans or our cash out refinances. So we'll talk about that in a little bit. You're going to have title fees, okay? You're going to have title fees. You got to get title insurance. You also have to make sure that your taxes are not behind. The title company is very important, and they're going to charge you fees. So in addition to your appraisal, your origination, and your title fees, you're also going to have, and a lot of lenders are going to be, I don't want to call it sneaky here, but when they're talking about closing costs, they may not mention escrows, okay? Which is your taxes and your insurance. Now, the reason a lot of people won't talk about escrows when they're discussing closing costs is because escrows are actually referred to as prepaid items on a closing disclosure or on a closing cost breakdown. But we know what the consumer wants. We know what the veteran wants. When they say, what are my closing costs? They want to know every single dollar that's being added into their mortgage in order to get the loan done. And these escrows, your taxes and insurance, are going to be added into your mortgage. So I want you guys to know you're going to pay that. And then the last thing, again, generally speaking, would be government recording fees. Okay, so each county across the country has to record your mortgage or record your deed of trust. There is some recording of documents that needs to be done, and there's going to be fees charged for that. They're nominal, but they're going to be charged, okay? So those are your necessary closing costs in most cases. Now, let's talk about this origination fee. A lot of people ask us, well, what is the origination fee and do I have to pay one? Number one, it's almost always across the board 1% of your loan amount. So if you're buying, or if, let's say you're going to borrow $200,000, your origination fee would be $2,000. It's 1% of the amount of money you're borrowing. You can have a less origination fee than that or a lower origination fee, but normally it is 1%. What is it for? It's where the lender makes money. There's no other way to put it. A lender might say, well, we cover our underwriting fee or our processing fee, and that's the fee we charge you in order to cover our costs. There's some truth to that. There's no doubt there's truth to that. It's not free to run a mortgage company. We have processors and underwriters and people we have to pay. We have to keep the lights on. So that origination fee helps us cover our costs, and also we make some money in that origination fee. And when I say we, we're talking about mortgage lenders in general. Now, I mentioned here at low VA rates, we don't charge an origination fee on VA purchase transactions or VA cash out transactions. We only charge them on our streamline loans. Now, as I stated, most lenders, however, are going to charge an origination fee. That's one of your competitive advantages in using low VA rates. Okay, now, we've also had a lot of veterans ask us if there's any way they can know what the closing costs are going to be before they close their loan. And absolutely. I'm not sure where that question came from, but we see it often. Veterans are getting smarter. They're actually really, really smart people. Consumers in general are becoming more educated. You should shop for a loan before you decide what lender you're going to go with. And the only way to do that is to figure out what their interest rate is and what closing costs they're charging. You can ask up front for a closing costs worksheet, a closing disclosure, not a closing disclosure, a loan estimate. In the past, it's been referred to as a good faith estimate, but lenders should be able to break down line by line an estimation of what their closing costs are going to be. Now, notice that it said estimation. I promise, guys, I'm coming into the home stretch here. Lots to talk about today, but I'm going to finish up here quickly. Before your loan closes, fees can change. Even the law allows certain fees to go up or down. Some of those have some restrictions on how much they can go up or down. And if the lender does not disclose to you in a timely period, that's within 3 days of a fee changing, then they're not even allowed to change it. So before your closing, you're going to get a closing disclosure. And that closing disclosure should have all of your final fees. If you don't like them, or if they've changed from that original conversation, or you just get a bad feeling, as a consumer, you have every right in the world to cancel your loan all the way up until you've closed. You can even cancel your loan up to 3 days after your closing in most cases. That's another conversation for another time. So ask for a closing disclosure. That's how you can tell what your final fees are before you close your loan. Lastly, are closing costs negotiable? Absolutely. Just like this. Somebody calls us up and says, look, I don't want to pay the title fees or the escrow fees or any of that government recording fees. We don't have to say, well. There's a negotiation that can happen. Please, as a consumer, use the power that you have. The power's in your hands. You're not going to win every time. And when I say you're not going to win, you may have to take your business somewhere else if we can't lower our fees or if somebody else can't lower their fees. But every single closing cost involved in a mortgage is 100% negotiable. And if someone tells you it's not, they may not be able to negotiate fees. You then can take your business somewhere else as you'd like. So yes, closing costs are absolutely negotiable, and there's something that as an informed consumer, we want you, from low VA rates to you, we want you to be informed, and we want you to be able to get the best deal that you possibly can. Last thing, people want to know typically, what should you expect to pay in closing costs as a percentage of your loan? Okay, normally speaking, you're going to have somewhere between 1 to 3%. Now, I'm sure there's some haters out there that are going to say, oh, that's way too high. Keep in mind, we didn't talk about discount points and all sorts of additional closing costs you can elect to pay to get a lower interest rate. Here's the final thing I'm going to leave you with today. The lower the rate, the higher the closing costs. Closing costs. I know my writing's not good, okay? So the lower the rate, the higher the closing costs. Same thing here. Higher the rate, the lower the closing costs, okay? It's a very simple, inverse relationship. Thank you for watching. This is Eric with Low Rates. Do we have any questions? No questions. Okay, hopefully you guys learned something today. Have a great weekend.